In this video, guys, we're going to look at the high momentum system strategy. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this is an interesting one. Day trading strategy. We're using a 10-minute chart. Unusual, I know, but this is why it fits in nicely. 10-minute chart. It works well on your currency pairs. It also works well on things like crude oil, gold, some of your indices, and some of your thicker, higher traded stocks. So what I've got in front of you, we have GBP USD, should I say, chart, candlestick, obviously 10-minute time frame, and the indicator we are using for this is the momentum indicator. On TradingView, insert indicator, it's down here under where are we, momentum, and other packages. I'm not sure what it'd be called, probably momentum, or some variant of that. You can check it out on your chart as well to see if it's the same as this, but you want length set at 6. That's the key for this one, guys. We 10-minute chart, 6 is the length we want. We want to have that 6 candle duration, which works very nicely for this. Like I say, it's an intraday strategy, but it kind of gives you a good, we're not overly aggressively trading here. It's not like a 1 minute or a 5 minute we're in and out. We're waiting for, you know, 1 or 2 good trades throughout a 2-day period. That's the kind of frequency we're looking at on this. Let's talk about the rules. Let's talk about the entries, the exits, and see exactly what we've got going on here. Okay, so the idea of this is that we are looking for divergence in the trend, or divergence, should I say, in price against momentum. Divergence is when price makes a new high, but the indicator does not. Price makes a new low, but the indicator does not. Okay, so example could be on British pound here, we have a new low pushed in here, very, very low, but we make a new low in the momentum indicator, so there's no divergence. However, when we start making, this low here is a new low, we make a new low momentum. You can see here and here. Let me get the drawing pen out so I can be absolutely clear what we're looking at, guys. There's a low, there's our low, there's another low here, just about, and there's a new low momentum. However, when we make a new subsequent low in price, we don't get a momentum low, so that is a divergence. We've got an uptrend there, in there, we've got a downtrend here, diverging away from each other. Now we are long. So we take the long as we start to come off that low. Now whether you do it on the subsequent close of a first green candle, or whether you do it on the hook back up through and go on a lower time frame, up to you. Something like the first green candle is great. If you get a hammer, inverse hammer, bearish, bullish engulfing, something like that as a trigger point, you know, by all means, I think that's a good way of taking the trade. So you go long on there, and then you are looking to close. Theoretically, the best time to close is when you then get divergence on a subsequent move in the other direction. So in actual fact, for this pound, let me just zoom out slightly so we can see the stuff we're looking at. For this pound, we do get an exit straight away, and if you're brave, you can reverse. So we've got a high here, don't forget, that's our last high at that point there. Now we're getting a new high around about where are we? No new high here, new high here. Okay, here's our new high, but we don't get a new high momentum. It's actually a lot lower than this point, so we're going short here with a stop above the high. Now you are probably going to say, I probably would be stopped out. You don't want to have that stop too snug, because you know, we know, guys, that putting a stop 1 tick above market's probe, so you probably want, you know, a few ticks above or below. If that stops you out, it's probably a bit tight. If it does, you know, it's one of those. We're not cherry picking here for the sake of showing that all these are winners. You might have got stopped out on this, but you might not have done. You'd have had opportunity to take some meat off the table on the trade as it unwound over the next 30-40 minutes anyway. But if you decided to stick with it and not scale, possibly you were stopped out on that. But if you weren't, and you were holding purely for a longer move, then you're waiting again for divergence in the opposite direction, or until the close of the session. So US session close, or Asian session close, or Europe session close. You don't want to overstay your welcome with this. The whole point of the trade is that it's momentum, not quite as much, wait for the spring to unwind. It's a mean reverting type trade. So there's opportunity to profit there however you trade it. Now whether you took that as an exit signal, like I said, if we were going long down here, which is what we would have been doing on the signal. We get a divergence on this low here. Our exit is going to be here. That's a decent amount of ticks, right? That's almost from taking it from high to low. If we flipped it and we got stopped, we're not talking a massive stop, but there's still opportunity for profit. Anyway, we can overanalyze it and talk about it forever. Let's look at something else. Let's look at crude oil. West Texas Intermediate, 10-minute chart, same settings on my momentum. Double check it. I'm on 6, I'm on the close. All is good. Right. How do we take the trade? Again, it's the same kind of thing, guys. We're looking for divergence when we go to a new high or a new low. Now, if we look here closely, we've got a high in crude oil here. There's a high momentum. We get a new high in price, but we do get a new high in momentum. There's no divergence. There's no trade on that one. Next thing, we've got a low here. That's our benchmark. We now go to a new low here, but we're really a fresh low in divergence. Ignore this kind of gap at the open because that's a false reading, obviously. The next trade, however, the next swing point here, our low right here, is a new low in price, and it's a higher low in the momentum. So we got that divergence. We'll draw it on for clarity purposes. Bang. That means we take a long. So we're looking to take a long on the close of that bar. If we're a bit nervous about it, the close of the next bar, like I said, I don't want to be strict and say you must do it on this. For me, if we get a wick, we get a probe, we get some sort of tail, we get some sort of intraday or intra-bar change in sentiment, I'm all over at the close. I want to keep the risk as tight as possible. I've seen the momentum, I've seen the new low as well, I've seen it come off that new low, I've got a way to quantify my risk, a few ticks below that low, I've got the kind of divergence in price, I'm going to take it. Now we don't get an opportunity to come out of this when the divergence changes in the other direction, because we just coming to the end of the day. The time we take this is about 3 o'clock, and crude oil pit session closes at 7:30. But nevertheless, you know, as we come into the close, we've got some meat on that trade. It's a pretty decent trade. It's a 50 tick trade. I'll take those kind of things all day long intraday. And the risk on it, let's just look at the risk for purposes, was say we went 65 on the stop and we took it on the close there. We're talking a 15 pip risk. The risk reward ratio on that is pretty good. Let's look at it. If there's another one later on here. Again, one of those dubious ones where you don't want to be too tight with it. You know, you've got about 10 points against you. If you got stopped, you got stopped. But let's have a look at it anyway. Again, we're not cherry picking stuff. We're trying to be in the real world here, guys. We got to drive higher. Good high momentum put in here. High in price here. That's our benchmark. Then we get another high put in just here. And just goes to a new high, but so it's enough new high in price. We can see down here, momentum does not go to a new high. Oops, I'm dragging my chart instead of drawing my line, which is what I do want to do. All right, there we go. There's our new high in new high momentum on 0.1, not a new high in 0.2 divergence. We take the short entry as we get that, so our short is probably going to be on the close of that bar, which is 12 now. We do get a good kind of, what are we looking at there, 40 pips plus 45 pips ticks, we're talking crude oil, sorry, profit. Up to you. You know, it's one of those. Do you take it on the counter trend move? Do you look for a home run? If you were scaling it out and then maybe had your stop at a more sensible level and that didn't ping you out, you can see here you're talking about almost $1, about 90 cents profit. So you know, risk isn't going to be up to you. You know the score, guys. If you're looking for a bigger move, you've got to be a little bit more stretched with your stop. If you're scalping it, keep the stop tight, grab yourself 40 ticks, move on to the next trade. You know, if you're looking for those kind of 200-300 tick moves for a longer time frame, let's just have a look and see if you would have got it actually out of coincidence, out of not coincidence, out of curiosity. You wouldn't have got massive move on it. How far does it actually go? And it probably would have stopped you out 3 or 4 days later on. I think if you're trading for a bigger move, you've got to have a bigger longer term thesis. Otherwise, you know, grab 50 pips, grab 40 ticks. I'll keep the risk at 15 ticks, 15 pips. Take the risk on that. Look for momentum to unwind. Grab it. Look for the trade the next day or the day after, or kind of a few days on subsequently. This is a powerful strategy. This is interesting strategy. This grabs decent moves. It's on a 10-minute chart. It's not scalping. Plug it into existing theories and theses on the market and see how you get on, guys. Remember, it's a 10-minute chart. We're looking at momentum settings again, just for a recap, are on the 6 period. We've got it on the close, and it's good for those thicker markets like your crude oil, like your gold, like your thicker stocks, like your currency pairs. Anyway, guys, that is the high momentum system.